Good afternoon, everyone, and thank you for joining us for business use of your home and federal taxes. My name is Steve Dial. I'm the CEO of A New America, and A New America is a 23-year-old nonprofit here in the Bay Area. We leverage entrepreneurship with underserved communities, and we also give technical assistance to small businesses. Today's presentation is in participation with our Women's Business Center in San Jose. The Women's Business Center is part of the SBA's Office of Women's Business Ownership that's dedicated to helping women entrepreneurs and women small businesses in order of leveraging the playing field. Also, the Women's Business Center is in part supported by the SBA and the Governor's Office for the Small Business Advocate for the state of California, and of course, the New America Community Corporation. Today, we are pleased to be in partnership with the Internal Revenue Service. The Internal Revenue Service, through their community efforts, provides formalized training to small businesses through a volunteer program where they list enrolled agents to participate in the workshops for small businesses. A couple of things before we get started. You're welcome to ask a question during the presentation. If you're not asking a question, we do ask that you place your phones on mute. This webinar is being recorded. If you choose not to be recorded, there's no problem if you want to leave the webinar at this time. And because we are recording this webinar, this will be available via our website, normally in about 2 weeks' time, where you can, review the recorded webinar. So a couple of disclosures. Again, the Women's Business Center is in part funded by the U.S. Small Business Administration. However, any opinions, conclusions, recommendations that are given in this presentation do not necessarily reflect the views of the U.S. Small Business Administration. Also, any reference to any specific product or service does not constitute an endorsement by A New America. And before I introduce our presenter, I would like to take the opportunity to introduce our partner in the Internal Revenue Service, and that is Rena Newell. She is the Senior Stakeholder Liaison for the Regional Office of the IRS. And Rena, if you would like to say a few words, please feel free.
Well, good afternoon, everyone, and thank you all for your participation. I'd like to say that the information that we provide is very beneficial, and what's even better than that, we have a phenomenal presenter that enjoys what she's doing, so she's a wealth of knowledge, and she's going to share that information with you. So I look forward to any questions that you all may have. Please present them. And I look forward to you all being a participants in some other events that A New America will sponsor with us. Thank you all for your participation.
Thank you, Rena. So it gives me great pleasure to introduce our speaker, Tori Charvis. Tori has been phenomenal in terms of being a facilitator and presenter in these programs. She comes with a wealth of knowledge. She is an enrolled agent with the IRS, and she's the owner of Tax Goddess, and that is her firm is located in the San Francisco Bay Area. She, prior to having her own practice, she worked as an accounting manager in the manufacturing sector for over a decade. She has volunteered her time with the VITA program via San Francisco State University for over 12 years. She's a faculty member of Lorman Educational Services. So with all of that, just want everyone to know that we're in good hands today in terms of a great presenter. And without further ado, I would like to turn it over to Tori.
Good afternoon. So, wow, all those accolades, they're gonna make my head swell and you won't be able to see me in the frame of the picture, but I am so glad you're all attending this seminar today. We are going to be talking about office use of home, which can be a little confusing depending on if you're a small sole proprietor, if you're a corporation. I mean, there's a whole lot of different types structures. So please feel free to type your questions into the chat. We will take a little time for question and answers that you can ask live, but I do monitor the chat as the seminar is going, and I will catch your questions as we go. That way you don't have to hold them to the end. So I'm going to go ahead and go for the next slide, please. So back in 2017, there was a tax law that came out that changed the landscape of the home office deduction and the deductions for those people that are employees working from home. Of course, this was pre-COVID. So we don't know if this will go back or not, but right now the law says an employee cannot take a business use of home deduction on their employee as an employee expense in itemized deductions. Now, a sole proprietor is a different story. The other side of that law change was you can not deduct more than $10,000 worth of real estate taxes, not real estate and taxes paid, including state and local, state income tax, SDI. All of those are reported and combined now on your 8829, which is the business use of home, and the Schedule A itemized deductions 1040. Now, this is a federal law. A lot of times when I'm working with a client, I tell them the state has different rules. Federal has its one set of rules. California likes to beat to its own drum and allow some things that the federal doesn't allow anymore. So we are focusing on federal today. I will eventually be putting my email and my contact information in the chat. So you're welcome to send me individual questions if they're a little bit more complicated than our seminar can answer. So, or webinar can answer, then I can address them to you one-on-one. Next slide. We're going to talk about how to calculate that deduction for that business use of home. What is business use of home? How do I qualify for that deduction? Because there are rules. There is something called business percentage. So you have an area of the home that is your business, and what percentage is that? And we're going to get into those details as we go. What types of expenses are included in your office use of home? Are there limits to taking those deductions? And where do I take that deduction on my return? Next slide. This is going to include a house, an apartment, an apartment, a condominium, a mobile home. All of those places can actually have a business use of home, okay? It's similar to a property in which you have basic living accommodations. Does it have a bathroom? Does it not have a bathroom? Does it have a kitchen? Does it not? Is it unattached is it an unattached garage? Is it a studio? Is it a barn? Is it a she shed or a he shed? Is it a separate structure in the back area? So all of those things can go and become an office use of home. Next, please. There is two methods in calculating the business use of home. We're going to talk about the simplified method first. The simplified method is so much easier than taking the standard method. It's used to determine the deductible expenses for your qualified business use of home. And I will use that term a lot, qualified business use of home, okay? Standard method is way more complex. It can be cumbersome, depends on how good at record keeping you are. Maybe you are really good at it. Maybe you're just like, yeah, I don't want to deal with it, okay? Simplified method is designed to reduce the burden, all right? It has a cap. It means you can only take up to $1,500 per year based on $5 per square foot of your business use of home, up to a 300 square foot area, which is basically a 10 by 3 area. Okay, so 10 by 3 gives you 300 square foot. All right, so a 10 by 12 room is going to give you 120 square feet. So continuing on with that. Next slide. So you can elect either method. You can use simplified or standard in any tax year. So unlike mileage, which has its own set of rules and taking an auto deduction, you can decide to use the simplified method one year and use the standard method another year. Okay. So whichever one you choose, you cannot change method for the same year. So you can't use simplified halfway through the year and then standard the rest of the year, okay? You cannot use the simplified method to deduct actual expenses. And we're going to get into what those actual expenses are as we progress, okay? The amount allowed is in lieu of, so simplified or actual, meaning I take the simplified instead of taking the actual expenses, okay? I report that deduction on my Schedule C as an additional form to that Schedule C. So my sole proprietorship reports its income and expenses on Schedule C, which is attached to the individual Form 1040. The 8829 is the form for the business use of home or home office. That is then included with the Schedule C, and both are included with the 1040 tax return, okay? If you use the simplified method, you won't be using the Form 8829. You'll simply be using a worksheet, okay? Next, please. So what's a qualifying business use of home exclusive use test? This is the first and most important test. Okay, you have to meet these specific requirements. The deduction could be limited, and you have to be following the exclusive use test. This home must be used for business, must be regularly used for your business, and it must be for your business. So, example, many of you might be using a bedroom. You might be in a 3-bedroom home or a 5-bedroom home, and you've set aside one room in that house to be your home office. Great. So you have that room, you have your desk, you have your printer, you have your phone, you have all your office supplies and your comfy chair that you're sitting in, and your, the family pet may wander in and out, and that's okay. But you have a spare bedroom that you're using, and there's a bed in that room. Your taking naps is not necessarily part of your regular and exclusive business use test. Usually when I'm working with a client and they tell me I have a home office, I usually ask to go and look at that home office, because if that person is audited, I'm the one who's going to have to explain to the IRS agent that why this is a home office and how it's regular and exclusive. And that IRS agent may want to tour that home office. Are you paying bills in the office? Are you playing video games on your computer, Candy Crush or Farmville, or yes, I'm dating myself. I know. Okay, so are you doing your Amazon shopping? Are you doing your Instacart? I mean, what kind of things are you doing internally when you're sitting at that home office desk? Okay, next slide. The business part of your home must be your principal place of business. It's where you meet with your customers, your patients, your clients, and it must be part of the normal course of your business. If it's a separate structure not attached to your home, that you use it in connection with your business. Example of that would be some homes in the Bay Area have what is referred to as a mother-in-law cottage, a tiny little like one-room studio that's in the back of the house. It's not attached to the house, but it's on the property. Okay. My office is in a converted garage. So the place where I live is a 2-bedroom duplex, and the garage has been converted into the office. And the only thing in here from a certain point on is my office stuff, my desk, my files, my bookcases, things like that. So it's in the house on the same property as the house, but it is separate and it is designated as an office, and it has its own entrance from the rest of the house. Okay, next slide. So for example, Ruth is a graphic designer. Her computer is in the family room, and that's where she does her design work. And the family also uses the room for recreation, movie night on Sunday, or, game night on Wednesday. In the chat, tell me if you think Ruth can claim a business deduction for that use of that family room. Just give me a quick yes or no in the chat. I see some resounding no's, and that is right, because she's in the family room, and that room can be used for, and is being used for, other purposes, right? So she does not use it exclusively for her business, so she cannot claim the business use of home, right? So let's test your knowledge a little more. Next slide. And the next one. So Greg is a brewmaster, and he's making natural sodas in his garage. Garage is not attached to the house, so it's a separate unit from the house. He uses the garage only for brewing and selling these natural sodas. One part is used for the brewing, the other is he does his tasting and he sells the sodas. Do you think he can use this garage, separate garage unit, for a business use of home? And does it meet the requirements of exclusive use? Yes, 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 yes. I'm seeing some yeses. But it's a garage. I mean, shouldn't he be parking his car in there? Okay, I see a no. I'd be parking my, well, no, I can't park my garage in here anyway. And no, he doesn't park his car in the garage. He's saying he has nothing but the soda business in this garage. He even has a little tasting bar for his customers to come and taste the latest flavors. It's not attached to the house, even though it's on the property. So I'm flipping to the next slide. He qualifies because it is exclusive, it's regular, and it's strictly for his business. Okay. So if you said yes, you got the right answer. If you said no, I would have been hesitant too, because my immediate thought goes to garage. Why would I be doing that in the garage? Well, because he's made it look really nice, like a tasting room. Okay. Next slide. So we have some exceptions to that exclusive use test. You do not have to meet exclusive use if you're using part of that home for the storage of inventory or product samples. Or maybe you're using part of your home as a daycare facility. Storage of inventory and daycare items are two separate sets of rules and separate requirements, specifically daycare. With daycare, we end up sometimes get into the number of hours a day that you might be seeing children, or children might be coming over, or even if it's adult care, like maybe there is, you're working with autistic patients or elder care. Those daycare facilities have their own special rules. Let's say you're in one of the downline marketing companies like a Pampered Chef or Avon. Yes, they're still around. Several other of those things that just sell products door to door or through a magazine or through a party system. You might have some samples that you're storing that has an exception to exclusive use, almost kind of like supplies, all right? Not supplies, but inventory. Next. Now we're going to talk about the regular use. So we've talked about exclusive use. So before I go on to regular, if you have any questions left over about exclusive use, please feel free to type them into the chat, okay? And I'll catch those. So now regular use. Regular means I am using a specific area of my home on a continuous basis all the time. If I occasionally use it, or it's I just need this one time to see this person, I'm not going to meet the test. So as a tax professional, I see clients on a regular basis in my office. So they come, they knock on the door, they walk in, my little alarm goes off, and oh, come on in, we'll do your taxes, or we'll work on your accounting or your bookkeeping or whatever it is. So it's regularly being used. Okay, so, but if I took them into the house and sat them at the dining room table because, it was too cold in the office, because it's been awfully cold lately. So let's just go in the house and let's sit at the dining room table and talk. Pull the laptop out, go to the... Now, can I write off the area that my dining room table is in? Because I just used it, it's this one time because it was too cold to sit in my regular office, or it was raining and there's a roof leak. Will my dining room area now qualify? Good answer. No, it will not, because it was an incidental, or it was a once in a blue moon type situation. So no, it won't work. So let's give you another example. So Tom is a painter. He has a separate studio in his home that he sometimes paints in. So he's an artist, okay? And he likes to be outdoors and he does landscapes. Can he claim a business use of home for his studio? I see a yes. I see some no's. I see a yes. Okay. So it looks like we're kind of split here. I have some yeses and some no's. So next slide. He cannot claim the deduction for the use of a studio because he specifically says, I only use it occasionally. I'm not using it continuously. It's a very narrow definition. And in working with business use of home, that sometimes happens is you get a very narrow definition of when you're asking the questions of someone, when you're asking the questions of yourself. Am I using this all the time, or am I just here on occasion? I'm an artist. I'm creating my art, but I'm a landscape artist. So I need to be outside, and I need to be by the ocean, or I need to be in the mountains, or I need to be in the fields or wherever. So I might only be doing the touching up in my studio. So in this particular example, no home office deduction. Okay. Next slide, we're going to talk about what is my principal place of business. This is the one that can be a little confusing for people. So this might, if this one gives you a little trouble, don't even worry about it. All right. Can I have more than one place of a business location? Can I have a home office? Can I have a brick and mortar location? Okay. Qualifying to deduct expenses for the business use of home if it is your principal place of business. Do I use it again exclusively and regularly for administrative or management activities? Okay, which also would mean I don't have a fixed location where I can actually conduct my activities or the most common part of my business. I can't conduct it anywhere, but I have to have that home office to do administrative. Next. Administrative and managerial activities are going to include billing, keeping my books and records. I have to order my supplies. I have to set up my appointments. I have to prepare orders for shipping. I have to write reports, right? So I have to create financial statements. So these are some of those activities. Next. The kind of activities that won't disqualify your home, employing others to conduct those administrative activities or those managerial activities, conducting these activities at a place that are not at fixed locations, occasionally conducting administrative or management activities at a fixed location, okay? Conducting substantial non-administrative or non-management at a fixed location outside of your home. Yes, you can potentially have more than one location. Stephanie asked in the room, so there can be two locations. There can potentially be two locations. So let's look at an example of how this could possibly work. Okay, so Jim is a self-employed plumber on the next slide. Most of his time is going to be spent at customers' home and offices installing and repairing plumbing. He's a plumber. So he's out fixing pipes, repairing water heaters, fixing, sinks and toilets. All right. He conducts these activities at places that are not fixed locations. Right? Occasionally, he has to do a little bit of administrative stuff. All right. So he has a small office in his home that he does this regular administrative and management stuff. He doesn't do his own billing. Instead, he ships that out and he hires a local bookkeeping service to bill his clients. Okay, so what are some of those management administrative things that he might be doing? Maybe he's making appointments. Maybe he's doing follow-ups. Maybe he's ordering parts for some of his jobs. Maybe he's ordering extra supplies because he has to not necessarily get a special fitted pipe, but there's also supplies like waterproof tape or plumbing gunk or other things that he maybe buys in bulk and stores for his use. So keeping all of these things in mind based on what you're seeing on the screen. Hello? Can you please mute? Please mute.
没有，我在
Okay.
meeting，没事儿，你说吧。
Does Jim's office qualify him as a principal place of business? Okay,
啊，
so
可以，我可以上台。那个
Oh, excuse me, just a reminder, if you are not asking a question, we do ask that you your phone.
okay, so I'm going to ask to move. Okay, now I'm unmuted now. So, so if we can go to the next slide. So yes, he uses his home office specifically for administrative and managerial activities. His choice to have his billing done by the local bookkeeper doesn't disqualify him. That was one of those exceptions to the rules, okay? His business meets all the qualifications, including principal place of business, because he has to travel out to meet those customers and to go out to those offices and homes. He doesn't necessarily have a brick and mortar location. You might also see this with doctors, lawyers, psychologists, therapists, massage people. Sometimes massage people are traveling notaries. I have traveling notaries that don't have a brick and mortar location, but what they do is they travel to client or location to location to do their notary work. So, any questions on principal place of business? I know this one could be a little funky. Give you guys a couple seconds. All right. So moving on to the next test, meeting place for customers test. So we've kind of covered this a little bit, especially with the plumbing example that we just talked about. But qualifying to meet customers test means I meet with my patients, clients, customers in my home as a normal course of my business. The deductible expenses for the part of my home that is used regularly and exclusively, meaning that extra room or that detached garage or attached house. Okay. I physically meet with customers and use my home as an integral and substantial part of the business that I am conducting. It is what I do, right? As a tax person, it's what I do. I need to meet with people. COVID was terrible. I didn't get to see people. I didn't get to talk to them. We had to do everything over Zoom, kind of like we're doing now. Okay. But as things have eased off, more and more people are starting to reopen those offices. Now, does physically meeting extend to virtual meetings? In the case of the situation where we had COVID, where we couldn't really leave our houses and we couldn't see people physically, yes, you're hosting that meeting because where are you? You're at your computer and you are then having a meeting with that client over that electronic airway. So yeah, you're meeting the client. You are conducting a business meeting and it is part of your regular substantial business. Okay, next slide. Okay, so Sarah's an interior decorator. So she goes out, she fixes homes, she makes them look pretty, or she comes to the office and say, oh, you need a plant over there, or you need a painting over there, and I'm going to fix this all up. Okay. So clients visit her office or her home office to look at the samples and patterns of materials. The room she uses is designated exclusively for this purpose, and she conducts all her administrative and managerial functions in this room. Okay, so she is only happening and doing her stuff in this home. So, do you feel that Sarah's home office qualifies as her principal place of business for deducting expenses because this is where she is meeting her customers? Yes, yes, I see it. Definitely. Okay. Yes. It's also to make sure you guys are still awake and that I haven't put you asleep yet. Next slide. Yes. See, Sarah's home office qualifies as a principal place of business so that she is able to deduct the expenses for his use because she meets the place for customers to meet. She meets that customer's test. And thank you for the compliment, Aditi. She meets with clients in her home as a normal course of business. So we've got some really good examples on what's qualifying for these things. So we have another test. Next slide. We've kind of talked about this separate structure test. Think about our soda guy, a freestanding structure such as a studio, garage, studio shed, barn, does not have to be your principal place of business or place where you meet patients, clients, or customers. Okay, so let's do another test. Next slide. So Joanne builds a custom designed furniture in her detached garage. So she custom makes furniture. Okay. When clients and Joanne talk about what they want, they talk in the dining room, right? Remember, I kind of just gave you a little example of that, but don't be fooled. Okay. Clients and Joanne talk in the dining room, but she builds everything in the detached garage. Does her garage qualify as a separate structure? So I'm going to give you guys a few seconds to answer yes or no. I see some yeses, I see a no, I see a yes, a yes. Okay, tricky one. Exactly, this is a tricky one. All right, next slide. Because Joanne's garage is a separate structure and she uses it exclusively and regularly to build her custom furniture, she does not have to meet clients there to be eligible to deduct the expenses for its use. Okay, subject to any deduction limits, which we'll be talking about soon enough. So our soda guy created his garage in such a way that he was taste testing, and the only thing he was doing in there was his soda business and taste testing and selling. Joanne is similar in the sense that, well, only thing she's doing is she's building the customer's furniture. All right. The only reason she's meeting in the dining room is to talk to them about plans. I would personally be hesitant to use the dining room because it's not a separate room that she's using exclusively. Remember the rec room in the other example? She was doing her work in the rec room, but there was also recreation going on in the rec room. What else could be going on in the dining room? People could be sitting there eating dinner, having breakfast. So I would be hesitant to deduct the dining room as well as the garage. I would definitely take the garage though. Okay. Next, let's talk about business percentage. Okay. A business percentage means most of the expenses related to the business use of the home are limited to the percentage of your home used for business. All right, that's tax talk for the area that you use for business, the square footage, is what percentage of the total house. So if your total house is 1,500 square feet and you have one 10 by 10 bedroom, 100 square feet, you would take the 100 square feet, divide it by the 1,500 total square footage, and you would get 7%. All right, so the square footage of the business use divided by the total square footage. So in my example, 7% of my expenses could be assigned to the business use of home. Okay. So area method, number of rooms method. It's a 3-bedroom house, no garage, no anything else. It's a 3-bedroom house with a kitchen and da-da-da. So 1/3. I tend personally to lean towards the area because there's so many common areas in a house, the kitchen, the bathroom, you know, what if there's 2 bathrooms? Well, if I designated one to only be used for my clients, if I'm a therapist or I'm like me, a tax accountant, and it's like 2 bedrooms, okay, nobody can use this bathroom because this is only for business clients. Then I might be able to include that square footage. But again, I would then be, okay, what's the square footage of that bathroom? What's the square footage of the office? All those things together. Okay. Next slide. So I just gave you an example of this, but we'll do it again. To use the area, divide the area used for business by the total. So if your office is 240 square feet and the home is 1,200 square feet, your business percentage would be 20%. Okay. Next slide. Now, to give you an example of the number of rooms, divide the number of rooms that are used for business by the total number of rooms in your house. So you can use this method if all the rooms are about the same size. That means they're all perfect little squares. Okay, all the bedrooms are 10 by 10 or 10 by 12 or 11 by 10 or so 10 rooms. One is used for your office, 10%. 1 divided by 10 rooms, 10%. Next. So I've already told you that you're going to be if you're using the calculated method versus the short method, you would be using Form 8829. And if you wanted to see an example of 8829, you can always go to irs.gov and look and type in Form 8829. It is the same for home daycare. 8829 is always used for business use of home. Okay. And it has a separate section on there for the home daycare. So let's talk about the type of expenses. Next slide. We have those that are related directly to the business, and then we have those that are not related to the business. So for business use of home, we break them into 2 pieces. The 2 main components are going to be your direct expenses, those directly related to the business use of home area, and the indirect expenses, those that are kind of for the whole house, but may have an effect on the business, and those that are kind of unrelated. So let's talk about the expenses that are related to the business activity. Next slide. What is ordinary and necessary? So the first thing I'm going to say is, who determines ordinary and necessary? The IRS. The IRS is going to say, this is ordinary and necessary for your business. This is an ordinary and necessary business expense. But remember, every business is slightly different. So, the old joke about, well, I want to write off the kitchen sink. There's only one person who can write off a kitchen sink, and that's the plumber. The plumber can write off the kitchen sink that he buys for another customer, but not everybody else. So what's ordinary? Advertising, taxes for your business, income taxes, some income taxes, maybe property taxes. Maybe you have to pay personal property taxes for equipment used in your business, car and truck expenses, salaries, wages, okay, labor. Maybe you have some other kind of labor, supplies, travel. Okay, those are all regularly ordinary and in a lot of cases necessary for you to conduct your business. These specific expenses are not limited to your business use of home percentage. So they have their own rules, specifically car and truck expenses, but these all have their own rules, but they're not subject to that business percentage use. They are deductible on Schedule C, which is then on Form 1040. Okay, next. So what's a direct expense? A direct expense is something that's going to be fully deductible unless it's subject to some kind of limit. So for an example, I painted the home office a different color to reflect the type of business I'm in, right? So painting, repairs. One of the windows broke in the last thunderstorm or windstorm. A tree broke the window to just my office. Well, that repair is directly related to my office, okay? High-speed internet in just the office versus the rest of the residence, okay? Those are going to be direct. A separate phone line run into your office is a deduction versus you use the same phone number as the rest of the house. That's not a separate deductible phone line for your business. Okay. An indirect expense, that's going to be based on that business percentage we calculate. That's going to be utilities, insurance, general repairs, the water bill. Okay. So in our 240 square foot version where we have 20%, okay, that 20% is going to be my utility bill was $500 for the year. I wish. So 500 times my 20%, my deductible amount for my home office would be $100. Okay. And you would apply this to the insurance, the water, maybe the garbage, general repairs. Let's say you have a gardener that comes once a week or every 2 weeks. That gardener is preparing for the whole house, but your clients are coming and walking up to see your office. They see that gardening area. That percentage might be deductible. Pest control is another one that if you pay for the exterminator to come out and spray for ants or bugs or spiders or whatever, that pest control is for the whole unit, but that business percentage can be deductible for your business use of home. Okay. And this is where lawn care can fall under unrelated, okay, indirect, improvements to rooms that are not used for business. Okay. That's an unrelated expense. I totally redid the kitchen, but I'm not a chef and I'm not a private cook. I'm not a nutritionist. I just wanted a real pretty island and I wanted new cabinets. That is an unrelated expense to my business. Okay. Next, please. Business parts of expenses that can be used to calculate your home business deduction: real estate taxes, mortgage interest, qualified mortgage insurance. Okay, so you own a home and you pay a mortgage. Well, one of those homes is your home office or using it for daycare or whatever. That percentage of the mortgage interest can be taken towards your home business deduction. Same thing with the real estate taxes. Okay, it falls under those indirect expenses, but it encompasses the whole house, but this is business. So now if you do take a portion of your mortgage and real estate taxes as a portion towards your home business deduction, that portion is subtracted from the total amount. And you can take the rest as an itemized deduction if you can itemize. So you don't get to take the whole mortgage interest deduction as on the whole real estate tax as an itemized deduction, and then a second portion towards your home office. That's double dipping, and there is no double dipping. Okay. Certain expenses are deductible only if you use your home for business. Insurance, rent, repairs, utilities. Now, some of you might not own a home. Maybe you rent and you're renting a home and one of those rooms is a home office. Then we would apply that business percentage to the overall rent paid for the whole unit. Okay. Next, please. Now, of course, we're going to have some new limits, and these are the deduction limits. Gross income from your business equals or exceeds your business expenses. Okay, the gross, then you can deduct everything. If your gross income is less than your business expenses, meaning you have a loss, then certain expenses are going to be limited. Okay, so if you're in a loss situation, then your business use of home is going to be limited as to what you can take. Okay, first, you're going to take the expenses that are ordinary and necessary for running your business, and then the business part of those expenses. Expenses that are not allowed because you had a loss, they're not lost. This is one of those deductions that you get to carry forward to the next year or until you have profit. So, business use of home, if your business is in a loss, you're not going to be able to take the whole deduction. But that portion that you didn't get to take gets moved to next year. And if you have profit, then you get to take the current year plus the part you didn't get to take in the prior year. And it's all still reported on Schedule C. So it's kind of nice that they don't take it away from you. It's not completely lost. It's just what we call suspended. It's sitting in a bucket until such time as we can dump that bucket and actually use those expenses. Next. This is the 8829 business use of home. So part used for home, and you'll see on line 3, there is a section that says for daycare facilities, not exclusively for business. You have to go to a separate line and do it. It's what area is used for home, what's the total area, you calculate the percentage. If you're in daycare, how many days, how many hours. So you're going to come up with your business percentage for other businesses, and then daycare has its section for businesses. Next. So the second half of the form is where we calculate. Remember, we talked about all those direct expenses and all those indirect expenses, mortgage, real estate taxes. We flip down to lines 18, 19. We see insurance, rent, repairs, utilities. And then as we go down a little further, we're looking at allowable expenses. This is what's allowed based on my income, because on line 8, we have to put in the income for the business. All right. If it's a negative amount, we're going to end up having some suspended, and we may have to carry that over to the next year. So if we have a profit, then we come down to line 36, the very bottom of the form, and it says allowable expenses for your business use of home. Next. This then all transfers over to our Schedule C. And if you come down to the bottom part of the front page of Schedule C, you'll see total expenses for business use of home. If you're doing simplified method, you'll get your percentages here, and then you'll do the percentage of the square foot, which is the $5 per square foot up to 1,500. Otherwise, you'll do the whole blown business use of home and be putting that on the 8829, and it gets added to page 30. Next. I've already kind of told you, you can't double dip. You can't take both the full real estate and the full mortgage interest on the Schedule C and the Schedule A. They have to be split. If you have more questions, please go out to irs.gov and look up Publication 587. Publication 587 gives you more detail on business use of your home. It goes into more descriptions. It covers everything I've covered in today's seminar. Next. If you decide to sell your home, there might be some rules that you have to deal with. If you've taken depreciation on your home towards your home office, meaning you've written off a small part of that house value each year as depreciation, you might have to claim that back. That information can be found in more detail under publication 523, Selling Your Home. Please keep records. Please keep receipts. Please keep everything. And if you are worried about how much paper might be in your garage or the receipts fading or anything like that, please know that there's scanners and you can scan these things in, and the IRS has actually allowed for scanned documents to be used because scans have time and date stamps, so they know they're not manipulated. Okay, so all of that is really, really important. Next slide. Please avoid illegal tax. Please don't be illegal. Please don't cheat. I mean, we know every taxpayer is completely honest. Nobody fudges their numbers. Most taxpayers accurately report their income and expenses. Non-deductible personal living expenses cannot be created to make business deductions. Okay, so IRS.gov gives you lots of advice on some of this. Again, it becomes your friend. So real quickly, in summing things up, and we're almost done. So next, we have the two methods. Just to kind of sum it up, we have the simplified method and we have the regular. We have the same rules: regular, exclusive, business percentage use of home. For the simplified method, you cannot exceed 300 square feet. For the regular method, it's going to be based on whatever the percentage is. Under the simplified method, $5 per square foot up to $1,500. Under the regular method, it's your actual expenses determined by your records that you maintained and your actual expenses. Next. Home-related itemized deductions on Schedule A under simplified, no depreciation, no recapture. Under the regular method, you have to split the itemized deductions between the A and the C, or if you have a farm, it's a Schedule F. Depreciation deduction, recapture of depreciation upon the sale of the home. Next. Under the simplified method, deductions cannot exceed gross income. Amount of gross income cannot be carried over under simplified. The loss of a regular method prior year cannot be claimed. So loss carryovers are a little different with the simplified method. Under the regular method, any amount that you can't take because you're in a loss does get carried over to the next year. And it continues to carry until such time as you are able to take that deduction. Okay. So in review, we talked about the requirements to qualify for your deduction. We talked about determining business percentage, what types of items are deductible expenses for your home, some of the limits, where we deduct these items on the tax return, the 8829, Schedule C, or what does the effect of selling your home potentially have? Please do record keeping, please, please, please. Tax avoidance schemes, and the simplified method versus the regular method.